Okay, good evening. Um, Recently I've been getting a lot of pressure, you might say, to increase my activity in trying to sell the books, and in the area of then where there's potential, especially where there's the possibility of motion picture interest. And that's there. The strike doesn't really matter to that, right? That there really is some interest. So I thought this evening I would just give you a little background in exactly what my own financial circumstances are and exactly what I'm able to do and what I'm not able to do. But I wanted to, for the picture, couldn't. That's the one I want. That's the one I want. That's Minneapolis from the looking toward downtown from it was a corner apartment in the Churchill Apartments, which was on the Skyway. It was on First Street. The post office was on the other side when I was living there for 6 years. That's a winter scene. And during those 6 years, the book was published, and I did my own print run in July of 1997, moved to Minneapolis in the 1st of September of 1997 with an arrangement with my employer to transfer. It was partly because of the possible conflict over the book, and I explained that in the Do Ask Do Tell show toward one of the last episodes of it. And that was the view. And during that period, those first 3 years with the print run, I sold most of the books. There was about 400 in the print run, and most of them I was able to sell or get rid of or get to distributors. And I ran out of the books in about 3 years, and then had to go to print on demand. So to some extent, the lower sales from print on demand, the lower sales is partly because a lot of the selling was of my own print run in the first 3 years. And then as books get older, they typically, nonfiction particularly, they typically drop off in selling, and that's pretty normal that would happen. But then there's been the interest recently in them, particularly the first two, since that I went to the couple of pitch fests, and since particularly after some things that happened in the Supreme Court in the spring of 2022, as you remember. I think there's been some increased interest. So I want to just go over my own circumstance and just tell you exactly what I can and can't do. And some of it's legal talk. I mean, I could get in real trouble legally, maybe go to jail or something like Donald Trump or something if I wasn't careful about this. But when my mother died, there was a trust, and so I didn't have to go through probate, and it allowed essentially a fourth of the liquid value. It allowed me to live in the house, and a fourth of the liquid value of all the assets came to me directly, and then there were various other things for other beneficiaries and so forth. But right now, and then in 2012 we made it a grantor trust. Right now, the trust is in three big pieces. One is that there's a portion in my mother's name, excuse me, which belongs to what you call a committee of beneficiaries. And then there's another trust in my own name which belongs to me with only minor restrictions on how it might be used. But there's some exposure. And then there's a non-trust portion, which is just in my name as an ordinary individual. And some of this came with that distribution. Some of it came from the liquid assets that I had from my own life before her passing at the end of 2010. About a third of that I probably had earned on my own, maybe half. There's also a smaller checking account that I use at Bank of America to pay most of my own normal personal bills. Trust bills I pay through Wells Fargo, through a different account, through a trust account. Because of the way taxes on Social Security income works, when you make a grantor trust, as we did in February of 2012, sometimes combining the incomes of your income with the part that belongs to the beneficiaries will result in a total larger income and will cause the Social Security income to be taxed at a higher level, which can go up to 85%. So while a grantor trust is convenient for filing with the IRS, it can have some disadvantages unless you work out something to reimburse yourself for those extra taxes, which is something I'm starting to do. Now, the committee of beneficiaries also legally owns the real estate, and it legally owns the condo I live in now when I sold the house in 2017, in October 2017. Now, there is also an annuity within my individual portion, which makes a redistribution back to the mother, my mother's portion of the trust in her name once a month as a kind of rent for living in the condo. And in practice, what happens is that automatic charity payments are sent out. Many are to charities she had supported during her life, and some are to my own beneficiaries. And so that reduces the liquidity of my portion by about 25%, because it has to be left alone to generate the annuity payments. And in my own trust, there's also another annuity which impounds most of what is left of it right now, but pays a small, pays a certain amount every month as income. And that's the whole point when you're old. And I turned 80 years old earlier this month. When you're old, when you are, yes, you're looking at an 80-year-old. When you're old, there's a lot of interest in making sure, that there's enough to take care of you if something really bad happens at the end of your life that's expensive. If you have to have caregivers, for example. So you can't just do anything you want. The ways these things are set up, I can't just do everything I want, even though I might think I could make a movie and become the next Christopher Nolan or something. I'm not really allowed to do that easily. There is also, I'll get to that later. But to show you the permissible uses of your mother's portion, or my mother's portion of the trust, or all the expenses associated with the condo itself. Even the electricity is paid for. But in turn, there's a kind of rent, And then a backup for my own Medicare and supplemental, that's under United Healthcare insurance, and even prescription drug coverage. And right now I just take 2 of them. There's coverage for deductibles, in other words, dental, and even for dental. And I had implants in 2013. And they cost about $65,000 for everything. And that's been covered. There's also a long-term care policy for me that belongs to literally the owner of the policy. Literally the owner of the policy is the committee of beneficiaries. You have to keep hydrated when you're talking. Keep my throat not from getting dry. The entry fee, so if something did happen to me and I had to go into a long-term care facility and there was an entry fee, like some of them have, that would be paid for by the trust. Now, any investments on mother's portion of the trust, for the biggest part, have to have a skin in, there's sort of a skin in the game rule. They have to actually make money, pay as you go, and pay for themselves. And it's also possible for a beneficiary, an organizational beneficiary, or a person to ask for 1% of the liquid value of the trust in any year to provide educational or medical benefits for a client. That's never happened. I've got a couple of organizational beneficiaries. I have said that I would not support gender-affirming care except in a case where there's actually a known medical cause and not just simply self-identification. I actually said that. I have to write a letter to the beneficiaries every year and in February. And since this issue came up, I actually said that in the letter this year. I kind of have a little bit stricter on that idea myself. So some impermissible uses of your mother's trust. Cryptocurrency, for example, or investment in an ego-driven project like making my book into a movie. I can't just use hundreds of thousands, and there is a lot of liquid money in mother's portion just to keep on trying to sell the idea of a movie. I'm not really allowed to do that. I could go to jail if I did that. And so, I've spent about close to $70,000 in the last year, about the amount that I made personally from selling the house at toward the end of 2017 and moving into the condo, which was a lot cheaper. And about most of that's been spent in the last year or so on the movie promotion. There's been a lot of interest in the books, even though they're old, which is unusual. So I'm in kind of an unusual situation. I'm trying to sell the books again, and I'm going to an event in Miami in November, which is probably right now the last event that I have scheduled. It's probably the last thing I can afford to do. I've got about $275,000 of liquid assets on my own, and that's accounting for what I owe in the cards now, my credit cards now. And I had a very, very unpleasant surprise today when I took my car in for a routine oil change at 90,000 or at 91,000 miles, and found I had to spend $3,000 in maintenance. So that was a very large hit today. 1%, almost 1% of this, or actually 1%. As you know, in a video I put up on June 30th, I have some interest in the idea of participating in a refugee sponsorship, but that would require about $15,000 of cash. It looks like I'm still looking at what that would really require me to do, whether I would be part of a group or something. It's not clear yet, but I probably would need about $15,000 of cash of my own, not from her trust. That would be on mine unless one of the beneficiaries, and one of the other beneficiaries is Save the Children. So I'm wondering if they would be interested in some kind of sponsorship thing. I'm going to be checking with them probably by September. I just, I have some rules. So because I have inherited money to manage, I never ask for donations. I don't do Patreon. I don't know if I'd be allowed to on YouTube. I don't run email subscription lists. I just don't really like to pester people. Don't run fundraisers for other people, except very minor ones on Facebook. I don't go out and scream and protest like it's beneath me to do that or something. I don't know. I don't go knocking on doors, and I don't assume that any organization or political movement could just speak for me if I were otherwise silenced or canceled. But there are some journalists I would love to work with, and some groups like Braver Angels that I have worked with. My income is from the pension, which was structured around the idea of taking your Social Security at 62, which is a little bit not really good, but in those days, in around 2001, when I took it, companies were encouraging people to retire at 55, which is not a very good idea. And now, my income's about $40,000 a year, which is about what I was making as an employee in 1990. That's kind of an interesting comparison. But the recent investments have spent, almost $70,000, or committed about $70,000 of it almost. So if there were to be a large amount of interest in the Do Ask, Do Tell books as a source of a movie, I wouldn't be able just to take money out of Mother's Trust or something to put it into it. That would probably get me in jail. And so I'd either have to do crowdfunding, I would finally have to do it, or else there could be an option buyout. So those are things that could possibly happen. I just wanted to say also that my own social credibility, you know, there could be criticisms of it. I didn't do as much as I might have, you know, as I could have been expected to do when I was still living at home with my mother in the last 7 years of her life. I could have done more I could have tried to become a huckster and make, you know, sell life insurance or something, or I could have become a tax preparer. That's a good one. Or I could have done grunt work and proven I could be a nice member of the proletariat and work in a fast food place or something, just like everybody else has to. And, you know, the left could really jump on people that have estates and try to make them do stuff like this. It's just that usually estates, there are dependents already that have to be served. In my family, that's not as much of an issue, so they really could have gone after me, excuse me, more than they have, instead of getting into demanding you join in anti-racism, or you join in specific causes, and you join and become a comrade and declare your identity and declare your pronouns and all this kind of stuff. They really could have individualized it. And they really haven't figured out that they could have done that. So that's what I have today. I just wanted to advise everybody as to what was going on and exactly what I can do and what I can't do. And I thank you for listening.